Now, if we want to find out what might going to happen, obviously at these prices we are in uncharted territories. I'm cooking only with water, like I told you before. So I need to try and come up with some things that at least are fixed, that help me to figure out what might happen next. And we know that we had this low at $1,038. We also know that there was this triple low at $1,615 in autumn 2022. That was the year when everything came down during the Fed hiking interest rates, and gold bottomed out at $1,615. And since then, basically, this whole rally really gained steam. And we have this top, of course, at 3,500. We also have this former resistance zone, the neckline of this cup and handle pattern, which now is strong support. And if we put this all together, we had a strong increase from the low in December 2015, 235%. Gold is up 235% since this low in December 2015, and it's up 117% since this triple low at 1615. I think that one of those two numbers basically will be retraced. So a market goes two steps up and then it comes back one step. Very simple concept. And if we assume that it would just retrace some form of a retracement of this rally that started at the triple low at 1615, and we would assume the best case scenario. So that means I simply use some Fibonacci retracement levels here, the 23.6 and the 38.2. So that's the best case scenario. Gold would probably just pull back to 3,055 to maybe 2,800-ish. That's the best case. The worst case would be it retraces the whole rally since December 2015. And that would take us back to that former resistance, which is now support. That would be a huge pullback. That would be very painful. And I can tell you, I can only imagine such a worst case scenario if the financial markets get into massive turmoil, meaning if we have a financial crisis like 2008. That would be necessary to bring gold down to these levels. Otherwise, I can definitely not imagine it at all. I'm pretty sure that a lot of big players, central banks and countries are waiting already around $3,000 to buy more gold. And again, the only scenario where I could imagine such a deep retracement, such a deep pullback would be if we get a financial crash like 2008. But that itself is also very unlikely in my opinion. We had one just a few weeks ago, end of March, early April, when the DAX crashed, the tech stocks crashed, Bitcoin crashed, everything came down. We had a Six Sigma event. The volatility index VIX went up to above 60. He did this only 5 times in the last 35 years. Panic was everywhere. And here we are, stock market's up again, DAX is nearly at new all-time highs, Bitcoin nearly at new all-time highs. The panic was so huge, and just for a few days, liquidity disappeared. But this is already enough to spook everyone, and very quickly things turn around. So imagining a financial crisis like 2008 is very hard for me, to be honest. Of course, we know the system is very unstable, but in any form of severe pressure in the markets, central banks would step in. 2 years ago, we've seen this bank run in the US, and over one weekend, the Federal Reserve created $400 billion in new liquidity, basically. So I doubt that we're going to see such a dramatic worst case scenario. I'm just laying it out to give us a best case and a worst case scenario. So we already nearing us the potential or the possibilities that what gold might do. But I don't think that gold can pull back that far. So I personally actually already for the last 4 weeks I've been saying that I believe that gold will probably just do this best case scenario, meaning it will stay above $3,000. It will stay volatile, back and forth, like what we've seen last week. $200 down, $130 up, $90 down, and everybody's like, oh my God, what's going on? Everybody's confused, but it's holding up above 3,000. This is a way of also basically doing the necessary consolidation, but just going sideways over time and crazy volatile. Everybody's freaking out, everybody's irritated, and I think that's exactly what's happening right now. So I'm in the camp of the best case scenario that gold will probably hold above 3,000. But I will show you a few other scenarios as well along the way. If we zoom in a little bit from the monthly chart to the weekly chart, this is the triple low here in the left corner. And we had, of course, this recent top at 3,500. Gold went up 117% since that. This is 2.5 years ago. So strong rally, massive rally. And this is the support that we have. This is the retracement, the best case scenario I just showed you. And this is the uptrend channel. So again, another part of basically trying to get a better idea of where we're going to see gold at the worst case pulling back here over the next few weeks and months. This is the uptrend channel. Worst case, maybe just the mid-trend line here. So that would again take us to around $3,050 within that retracement box. So the problem that I have with the weekly chart right now is we have a sell signal on the stochastic, and usually that should take a few weeks until we have an oversold setup, which then is a buying opportunity. You need to buy low and not high, of course. And it's always difficult to figure out what is low and what is high, and you need to know your time frame to understand it better. So weekly chart means you are in for at least a few weeks, a few months, a few years. You are more of an investor type of guy, and that means you want to have oversold weekly charts to look for contrarian opportunities. And this oscillator is just rolling over, so we have to assume that this consolidation in gold will take a few weeks at least. If we zoom in into the daily chart, so we make another step closer, this is the rally since last year, the breakout basically. And the good news that I have for you is we have these two green open gaps. They happened just very recently when the Asian session started trading, and immediately a gap down. 80% of those gaps are getting filled. So we have two open gaps on the upside, which is a very good thing, because that means there is a certain trajectory for gold to go back up to these levels and close the gap. 80% is the probability that these gaps are getting closed. So that's already helping us to understand that probably the trajectory is to the upside and not to the downside, even though gold came down hard over the last 4 weeks. You can also see with respect to the 50-day moving average, on Thursday it quickly went below and then turned around violently, and actually yesterday's close wasn't that bad, back up about around 3,200 is actually not bad for the price action we've seen during the week. If, of course, the 50-day moving average wouldn't support the market any longer at some point, then the red one, the 200-day moving average, which is one followed by many, many people, would probably become the next target. We see both of them nicely aligning, moving higher. So it's all still a bullish setup. We just need to be aware that we are in a consolidation and it will take some time here. But you can also see that this red 200-day moving average is moving into the retracement box. So the Bollinger Band's also telling me we're most likely going to see a sideways period here for the gold price, meaning a trading range 3,400 to 3,100-ish maybe, something like this. I don't have too much expectations on the upside, but I also am not worried that we have a huge downside here. The problem is that many people have been running behind that train, the gold train that has left. I also know quite a few people who thought they are smarter than the market and they sold all their physical gold very recently and now believe they can come back in a few $100s lower. Perfect if you can manage to do it, but I know that it's very tricky and difficult. So what we have witnessed during this massive uprun over the last 2 years is that many people have been running behind the train, and you don't want to be in that situation. So I always recommend, if you want to move into a market and you're uncertain when and how, at least do it in steps. Scale in multiple entries. That's so much better than trying to time the market perfectly. So back to the daily chart. You can see we already have an oversold stochastic on the daily chart, which tells me probably next week we're going to get a continuation of that bounce that started on Thursday. Again, I think the downside is pretty limited in gold. I will show you overall where I think in detail this will go over the next few weeks. But one more thing is important here. We have a triangle The red downtrend line probably will limit gold to the upside for now, and as you can see, this green support line here has basically held last week as well. Probably within that triangle is the trading range for the next few weeks. And coming to the sentiment chart, which is, I believe, one of the most important parts of investing and doing analysis also on the markets. Unfortunately, sentiment analysis gives you very few good signals. You have to wait 10 years, sometimes 20 years. So the last really good signal, for example, for gold was the German Bild Zeitung with their front page in 2011, when it was clustered full of gold bars, and it was a clear sell signal back then. So you don't get these sentiment signals all the time. But we have this optics gold sentiment indicator, which was showing extreme panic back in autumn of 2022. And of course, over the last few months, actually over the last nearly 12 months, it's been nearly always trading around excessive optimism. And during a bull market, these excessive optimism levels are usually not going away in terms of you need a dramatic crash sell-off back down to panic. But what happens usually is cold showers. So you have these strong $100, $200, $300 pullbacks, everybody's panicking, and that's already enough to calm down the sentiment, and then the bull market can continue. And I'm still believing that this is exactly what we're just right now witnessing. It's just another cold shower in the gold market to calm down the overheated, excessive optimism. I want to see this sentiment optics staying above, let's say 55, 50. That will be good. And right now it looks already that we have seen a sentiment low last Thursday. So that also is still in bullish territory. There is again a lot of room to the upside for the sentiment indicator. So yeah, it's just a cold shower probably what we're witnessing. A little bit longer, lengthy cold shower for 4 weeks now, but that's good too. And if you look at the commitment of trades, so that's the futures market, how the big players are positioned. I used to look at this very extensively in the past, but as I told you in the beginning, I believe that the physical market has taken over. I believe that the physical demand from China is much more important. Here at the COMEX, that's where all this paper gold kind of game is happening. And it used to be very important to look at what the commercials are doing. I don't think that this is the case anymore. I still look at the numbers, but not as much as I used to. So what we've also seen down here, actually a pretty high net short position of the commercials over 12 months. So while gold was rising up $1,000, this commercial short position basically more or less stayed the same, around 300,000 sold contracts. And just in February and then in March, they started to reduce it into rising prices. So that tells you also that there has been certain pressure in the futures market for the paper commercials. We are now at 200,000 net sold short contracts. It would be good if this moves up to something like a similar number that we've seen at the last important bottoms, which means around 100,000 net short position, but I doubt that we even get there. As you can see in the past, it's been a rather reliable indicator for calling important tops and bottoms. But I don't give it so much meaning anymore, but I look at it on a weekly basis, of course. More important, I believe, is the seasonal cycle for gold. Still very important, actually. And it looks like this year it's really following the pattern established over the last 15 years. Usually you want to have, for statistical reasons, as much data as possible, so I could also use the last 57 years, but I believe there was a change in the gold market since basically the financial crisis and then also the top in 2011. I think the Indian farmers are not playing such a big role anymore. Usually the quality of the monsoon basically affected how much they would be able to spend for the wedding season in India. I believe now, yeah, it's an important part because India, I mean, most of the gold actually is stored in Indian temples and hanging around Indian women. So it's very important to understand this. But I think more important nowadays is the Chinese New Year, which is February usually. So the seasonal pattern has changed a little bit, but every year between March and May, basically you get a very important top. And it looks like we got this year as well. And then usually it's followed by a pullback or a correction into the early summer, June, July. Then you get this summer rally usually in gold, and then a sell-off into mid of December. The last FOMC meeting of the year has most of the time, the last 15 years, brought an important turning point for gold. It was like this last December as well. And right now I assume something similar might happen in the fourth quarter this year, but this is still far away. Right now I'm interested in what's going to happen in the next few months. And of course this turning point in mid-December usually then kicks off a very strong rally into spring of next year. That's the best time for gold investors and especially also for mining investors. And I'm interested in that big turning point in mid-December, and I'm interested in that big turning point here in June, July. So right now we are mid-end of May, so we probably need a few more weeks of patience, but this is coming. If gold can held up well above 3,000 until then, yeah, we probably see both gaps being closed into a summer rally, and then we might see 3,400 and 3,500 rather quickly in the summer months already. Otherwise it will take a little bit longer, but this pattern is pretty reliable, so seasonality is very helpful for understanding where we are in the gold market. And so putting this all together, this is for our chart of gold. We have this big triangle. I believe these two gaps at some point will be closed over the next few weeks, maybe 2-3 months at a maximum, and I believe something like this is probably going to happen within this triangle, back and forth, volatile. We probably see a bit more of pullback after recovery. It's going to be a little difficult, but overall the trajectory is still to the upside. And I think we're going to break out of this triangle probably to the upside. If not, of course, I mean, I again have no crystal ball. If this support here from this triangle doesn't hold, and also this support zone doesn't hold, then we really talk about the deeper retracements, and that would probably send gold to 2,800, 850 maybe. But that's already my personal worst case. I think the dark blue one is the main scenario for the next few months. And another main super strong argument why I believe that this more bullish scenario is going to play out is the fact that silver hasn't shown up. Usually on any top that I have seen in gold over the last 25 years, any more important top, silver was there and had its own run for at least a few days or a few weeks. We haven't seen anything like that. Silver is massively lagging. The gold-silver ratio around about 100 ounces for 1 ounce of gold is crazy outside the box. If you speak with miners, I think Keith Newmeyer, he told me a few weeks ago, they mine 7 ounces of silver for 1 ounce of gold. The market is trading at 98 ounces of silver for 1 ounce of gold. So for me, silver is extremely undervalued. It's a huge opportunity. Yes, it's lagging, but trust me, I've heard that also in the first bull market, 2001 to 2011. And silver will catch up. I'm very sure about it. If we look at silver, it looks like, of course we can discuss how exactly to define these ranges, but it seems like silver now has moved into the $30 to $50 range, where we've been very rarely trading over the last 50 years. And to me, this is basically clear now that the magnet is the $50 mark level, and silver wants to go there sooner or later. Of course, silver also has a cup and handle pattern. I don't know why they are showing up so much over the last few years. Bitcoin also had one. But this is the mother of all cup and handle patterns. This is like 50 years. It's a logarithmic chart. So you have an uptrend. And if you take the depth of this cup and add it to the breakout, I don't have enough space to show you where this could go. On a linear chart, we're talking $100. On a logarithmic chart, we're talking $500 silver. And if you believe that gold can go to $8,000, and if you believe that we might see a gold-silver ratio at 15, like we've seen at the last big top in 1980 at this bull market of the 1970s, silver can go to $500, I think, but this is still a few years away. So right now, what's important, I think silver is moving into that blue box. I have these blue arrows here. This is going to happen, and once it breaks out of this huge pattern, you've seen what happened in gold. This is an even bigger cup and handle pattern. There is 50 years of energy compressed being unleashed once it breaks out. So I don't know when the breakout exactly will happen, but we're getting closer. So I'm very optimistic on silver. The issue that we have here in Germany with buying physical silver is the VAT, which is actually making it a little bit more difficult to invest in it. But still, I'm a silver bug. I love to own physical silver, of course. And of course, silver miners give you a nice upside. It's been very tricky with silver. It's a tiny market. It's doing everything to deceive all of us. It moves like this and then it moves like that, and you have to be very careful what you do. I don't personally trade silver myself, but I believe the opportunity is huge for the physical silver and also for the silver mining stocks. So I have a minimum target of $100, but on a logarithmic chart you can also come to $500 of silver over the next few years. And if we zoom into the daily chart of silver, you can see that silver is up nearly 60% since the last year, the last 15 months. Most silver investors are actually disappointed, but I think it's a strong performance. So, of course, looking at the gold-silver ratio, that's what makes many silver investors disappointed, but it's been an excellent investment over the last 12, 15 months. But it's just only following gold. It's not doing its own thing. At the grand finale, silver will take over the party, will take over the mic, and it will go crazy for a few weeks, months, maybe half a year, maybe 8 months. And it will not listen to gold anymore, it will do its own thing. But we're not there at all at the moment. This will come at some point. And this is also the warning signal that once this happens, then it's also most likely time to move out of the whole sector at some point, because we might then have a long multi-decade bear market afterwards. But we're still far away from that. What we see on the daily chart for silver, trading around the 50-day moving average, nicely above the 200-day moving average, all more or less moving higher. You see that this crash in the stock markets affected silver for a few days. It came down to 28.35, recovered very quickly, and respected now this uptrend line. We have the resistance 34 to 35. That's the line in the sand. And once the silver bulls can take out that resistance zone, I think we quickly go to $50. And right now it seems to be like consolidating in a kind of a flag consolidation pattern here. It looks all okay. It's not super exciting. It might take another few weeks, months, who knows, but I don't see a lot of downside in silver either. I personally buy more physical silver at these prices. I don't buy physical gold at those levels at the moment. And again, I believe once we take out $35, the move to $50 can happen very quickly. Remember 2020, the summer of 2020, silver had a hard time during the COVID crash. It went up to $20 and then within 5 weeks it doubled. So this is what silver can do. And it will happen so fast that if you're not invested already, you're running behind the train and you have no chance to get in. So silver looks positive for me mid to long term. Short term, maybe still more patience necessary. But what looks really promising, and I have to say thanks to Claude, he basically gave me his wish list and he said, bring in a chart of the TX Venture Index. So this is the last 26 years of TSX Venture Index. I have been very active in the Canadian mining stocks in the early 2000s. So I remember exactly that run up to this red circle here in 2008. It was a very great few years investing in mining stocks. And as you can see, since then, the stock index is trading far below that high from back then. And this is the financial crisis. It came down hard, the index, it recovered, but never made it back to this top. And over the following 15 years, it's been a nightmare, to be very honest and frank here. You can see like a long dragging bottom pattern. But if you zoom in, you can now see we have an uptrend, and it seems like this whole pullback from the summer of 2020 is done, and the TSX Venture Index is gaining momentum here. This is the weekly chart. If we zoom in further, this is the daily chart, and this is this crash situation from end of March, early April that I just showed you in silver as well. It affected everything back then, but you can see how nicely this index has recovered and is making new highs. It's looking much better than silver. There's a nice momentum now. Both moving averages are nicely below. And I think it's time now that all these smaller mining stocks that are in the TSX Venture Index are starting to catch up. So I really like the momentum. The chart looks very promising, of course. This is not happening overnight, but you all know that gold had a massive run and most of the mining stocks are lagging like crazy. And looking at this chart, looking at this behavior of the last few weeks, I really like it. I think it's finally time that there's going to be more momentum coming into the sector, and all those beaten down, undervalued mining stocks will get some love. So that looks very promising. And you can see we had a little sell signal recently, but it seems like the market already turned around. So yeah, Claude, it looks really good. This index it tells me that the whole world of Canadian mining stocks at the TSX probably are looking into quite a nice second part of the year. And at the end, like always, I go through the list of participating companies at these conferences, and I handpick a few only based on technical analysis. I throw away any fundamentals that I might know about the company. I went through all the charts of the participating companies. And I can tell you, I like Latin metals. This looks good. It looks like a turnaround here. We had a nice bottom pattern over the last 1.5 years, basically. Stock is moving higher. We had a buy signal very recently. Yeah, this can easily pop 20-30% in the next 1-2 weeks. I like also GFG Resources. Yes, it's been already trading higher. I had already a nice run over the last 12 months, but I love oversold stochastic setups, and yeah, I think it doesn't take much for new all-time highs here. And the last one, Trifecta Gold, also looks pretty promising. Turn around on Friday, and I have a buy signal here as well. So those are the 3 stocks. Maybe you still have time to talk to the management, learn a bit more about the story. Those 3 charts look promising. And yeah, that's basically it. Join my Telegram channel, it's all free. Lots of good investors from all over the world. I post all my daily, weekly, monthly research. We have daily calls on gold and silver. We have in-depth Bitcoin reports, in-depth gold reports. And I post also all the interviews I do on Kitco, etc. Everything's for free, and you will meet a lot of great investors from all over the world. And also my website. You can sign up for the free newsletter and the free Substack. And that's it. I doubt that we still have time for questions. No.